So there's been one question that's been looming in my head for a long time over the past few months, and I'm sure in the markets as well, and that's, is Bitcoin going to capitulate one more time? Is it going to make that lower low? Now there's arguments for both sides. A lot of people think the bottom is in, a lot of people don't. I personally don't think the bottom is in. While a lot of indicators may tell you that the bottom is in, there's also a lot of them telling you that it's currently not in. Now, even though we can argue all day about if the bottom is in or it's not in, there's definitely one thing that we can definitely come to a consensus to, and that's that the bear market is just going to last a lot longer than we actually want it to. If we really look at the data and we really look at the charts, even if the bottom is in or not, it's going to be a long road from here. And before we get started, make sure to like and subscribe to the video down below to help support the channel. Now let's get right into it. Now the first chart that I want to look at is the S&P 500 drawdowns over the, from the 2-year highs. Now, one thing that we have to remember is that in bear markets, they typically last quite a while. They're not these 12-month stints and then they go right back up like what we saw in 2020. That really wasn't, I wouldn't consider a bear market. While yes, we did have a 35% drawdown, as you can see over here, it literally lasted like 3 months. So it was an extreme V-shaped recovery. But if you look at all the other bear markets, it's completely different. Now, everything seems pretty similar within a range of, let's say, 20% to 50%. Obviously, the Great Depression was an anomaly. It was an insane event that we had, 86% drawdown. I don't think we're going to see something like that, but you can never rule it out. Now, if we go back and look at some of the recent bear markets that were very vital, we're going to be looking at 2008. Obviously, the great financial crisis dropped around 57%. Obviously, that is not even half of where we've dropped right now, as we're currently down 28% for the 2-year highs. Now, another one is the dot-com bubble, also dropping 50%, showing, and this one lasted about 2 years as long as the great financial crisis. Now, I think we're in a very similar time in terms of like a financial crisis to 2008 and 2000. We're kind of in like a hyperinflated market, and then also the sovereign debt crisis makes it very complicated. So even if we do go into a drawdown, I think it's going to be a multi-year drawdown. I don't think 2023 is going to be the relief year. I think it's going to be a very stagnant and kind of rebuilding year, in my personal opinion. Now, another very important one is the late 1980s. Now, this one was very important because the entire 1970s and 1980s suffered from extremely high inflation, and they went through multiple bear markets and recessions as well because of, that type of stuff. And you could see that right over here, they dropped around 35%, which still gives us room to drop at least 7% more. Now, this is the one that I think is really important because this is something that we're very close to right now as well, right? High inflation. They had the oil embargo and the thing going on with OPEC Plus right now. There's a lot of similarities to the 1970s as to where we are right now. And you could see that they dropped around 48%. And the last one that I want to go into is the 1944 to 1946 chart. As you can see, it dropped around 29%. So basically the same amount that we dropped right now. The important thing though is that this lasted 2 to 2.5 years of us basically just going sideways. And if we take a little bit of a deeper dig into this, you can see 1946 to 1948 overlay. Currently, we're looking at the inflation here in the bottom, and then the two lines, the black and the purple. The black is 2022, and then the purple is 1944 through 46. Now you can see that it's been very, very similar. Obviously, this was the COVID crash, kind of an anomaly. Just for the view of the chart, everything other than that looks literally identical. Now you can see currently where we're at is first we had this massive capitulation event right here, which really set in the lows for 1946 and currently 2022. Another thing to consider is that we had one more push to the downside. Now, we didn't go that much lower. I mean, the low was set at 26%, and then the next low was set at 27. So literally 1%. It wasn't even 1. It was 0.9% lower than this low. So while we didn't make a lower low in terms of it being significant, the really important thing is how long we stayed down here for. I mean, you could see right over here, this was August of 46, and we didn't really start to rise until like the second quarter of 49. So yes, we didn't have to go lower, but we did spend a long time at these lows and continued to hit it over and over and over and over again. And they didn't get that capitulation event that a lot of people are talking about. But one thing that is very interesting is how long this actually lasted. So maybe we don't make lower lows, but we could suffer something like this. Now, when we're talking more about Bitcoin, because back in 1946, there wasn't any Bitcoin, so we're kind of in a little bit of a different scenario at this point. You can see that there's 3 different lines. The red one is the 2022 bear market for Bitcoin. The light blue is 2017, 2018, and the black line right here is 2013, 2014. The interesting thing is that we are currently at the same time frame right here, where we're kind of, we've already capitulated, we've already fallen, we've made our floor. But you can see the last 2 bear markets also had another really important push. This was obviously the break of the $6,000 floor in 2018. And then in 2013, 2014, we had another capitulation event as well. So post or 2 prior bear markets for Bitcoin both had capitulation events where they already set the floor, they fell a ton to around the negative 70% range, and they ended up falling to negative 84% and negative 85% from the all-time highs. And currently, we're still 10% away from that type of capitulation. And one final thing that I really want to show you guys is that the hash rate for Bitcoin is at all-time highs. While this is really good for security and Bitcoin's network being competitive and keeping it safe, it's also not really good when the price is very low for these miners, because that means there's low profitability. And eventually, if you take a look, the amount of miners that made from each hash plummeted to its lowest level ever, dropping by more than 80% since the previous year. So basically what's happening here is that a lot of the miners aren't able to become as profitable to pay for these rigs in order to mine Bitcoin, because the hash rate is so difficult, and so that takes up more energy. More energy means more cost, and if Bitcoin's price is low and it continues to drop, we could see a minor capitulation happen, which could again send the price even lower. So those were a couple of the charts that I really wanted to go over, looking at the bear markets in the S&P 500, really taking a look at 1946 and 48, and then also overlaying that into what Bitcoin's bear markets look like. So my personal opinion, I think we can go lower. I really do think we can drop a little bit lower. How much lower, I'm not 100% sure, but I honestly wouldn't be surprised if we drop at least 10 more % in the total cryptocurrency market cap and in terms of Bitcoin's price. I just think that even though there are some indicators that are telling us we have bottomed, there's also a lot of them that have told us that we're not there yet. One of them being the VIX. Now, the VIX is a volatility index. Any single time that we've had a massive drop in the markets, anytime we've had massive capitulation or massive drawdowns from the highs, the VIX has gone above 40 points. Now you can see it's happened over and over and over again. Here, back in the dot-com bubble, here in the great financial crisis. So here's the dot-com bubble, great financial crisis. Right here in 2011 when we had another dip in the markets. This is during the pandemic when we had 35% drawdown. So while it's not really a recession, so to say, it did have a 35% drawdown, and you could see it went above the VIX because it was very volatile. Now, if we take a little bit of a closer look, you can see that we still haven't hit those 40-point levels that have been historically accurate in, a massive capitulation or market drawdown. We've gotten pretty close right around here, right around the early parts of 2022, but it just hasn't passed it. So what I think we can still get, which means more downside to the markets, is maybe we get one very volatile move to the downside, and then we can kind of stagnate from there. So that's one indicator telling us we haven't really hit the bottom just yet. Now, another thing that's really concerning to me is the Bitcoin dominance. While people are saying that we're bearish and that we're going into a recession, which we currently are, one thing is that the actions do not show it, right? Whenever Bitcoin dominance is low, that means there's money in altcoins. When people have their money in altcoins, it's because they think the market's going to go up, right? The last thing you want to do is hold altcoins in a recession, because those are the ones that are going to drop 70, 80, 90%. Whereas Bitcoin is going to hold its value a little bit better. Currently, we are at all-time lows for Bitcoin's dominance, and typically when we get to this level, like you could see over here in the 2018 bear market, most people will avoid altcoins and then put their money into a safe haven in the cryptocurrency space, which could be stable coins or Bitcoin. And then as you can see, as the bull market resumes, then people will get into altcoins because it's a faster horse and it's going to make them money. So when we're in bad times, we put our money into Bitcoin or safe havens so we don't lose as much. And then bull markets, we do the opposite because we want to make more money. Well, what you could see is obviously we're in a recession. Obviously we're in massive downturn, but yet the Bitcoin dominance has not flipped yet. So even though, let's say Bitcoin's price does fall, I don't think it's going to fall as much as we actually think it might, because again, there needs to be more Bitcoin dominance. I think more people are going to be putting their money into it, more of as a safe haven. I mean, as we've seen, the Bitcoin has been less volatile than treasuries and the stock market over the past 30 days, or even this last quarter. So that really tells you something about Bitcoin and holding its value. Obviously, we also know people will hodl through insane amounts of drawdown and for years and years and years. So it really proves that this is a strong asset class that keeps its value. But I think what we need to get here is the Bitcoin dominance shifting, which means Ethereum, layer ones, altcoins will all start to lose their value. And maybe Bitcoin doesn't drop as much, but it can continue to drop. And another reason for this is because as long as we're raising interest rates, that's going to continue the strength in the US dollar. And as the DXY rises, it's an inverse pair with Bitcoin. So as the DXY rises, then Bitcoin and risk assets go down. And as you can see right here, we're in an extreme uptrend, and there's really no fundamentals telling us that this is going to slow down or stop. Now, this orange line over here is actually highs that I have from early 2000s, which is the last time that the DXY has reached these levels. We can't get back to it on the daily, but basically these are extreme highs. And what I see from this uptrend is maybe even if we retest over here, I think ultimately the dollar, because of the interest rate hikes, because of the recession, because other countries' fiat currencies are losing value, more people are going to jump in the dollar. It's going to give the dollar strength. And then what we're going to see is maybe the dollar top out anywhere between 120 and 118 points. So as the DXY goes up, Bitcoin and risk assets will probably go down, and I still see some up room for the DXY. And with all that being said, obviously we know that Bitcoin has been coiling up. Anytime that Bitcoin coils up and consolidates and there's no volatility, there's always massive breakouts. They don't always have to be to the downside, so to say, but it is definitely something to look into. And what we've seen is basically from the middle of June, since we capitulated, we really haven't broken out of the zone of, let's say, like 23,000 and then 18,500. And then we've been in a very tight range of basically 20,000 and 19,000. So Bitcoin has really held its value in this point, but I think it's almost time for us to get into a different spot. Maybe we capitulate upwards, but as you can see, as we draw this trend line, you could see that a breakout is possibly imminent. Now, a possibility, because technicals never really have to go the way that you draw them because they're very subjective, we could just continue to consolidate out. I mean, that is a possibility, right? It doesn't mean just because we're in a descending triangle it has to break out, but typically when it does consolidate, when there's not a lot of volatility, it's because it's in other markets. And as it's been in treasuries and bonds and things like that, maybe it comes back to here. Or again, we are waiting for that capitulation event. We know that miners are struggling right now because of Bitcoin's price and the hash rate difficulty. So that could be a catalyst for us to move down even lower. Or honestly, something that I believe could possibly happen is a fake bear market rally, where obviously we break to the upside. Maybe we break these highs or these highs. Maybe we come in to fill this imbalance, which is basically when you're looking at the market is inefficient. It just drops. So this is literally only sellers in this area. Maybe the market comes in to fill it. Maybe people get stuck up here. They continue to buy because they're like, Bitcoin is now the new reserve asset. We're going to be buying this because even though we're in a recession, Bitcoin's price is going to go up. And then what happens is that once we get into this area, maybe we come back down and really take out retail. But those are just a couple of theories. Now, if you've made it this far, congratulations and thank you. But I think one of the important things to remember, and one theory that I have, is that even if Bitcoin doesn't drop any lower, let's just say for, 17,600, right around here, this low is the lowest point that Bitcoin goes. I think that we can still see a longer bear market, or the prices of Bitcoin holding at these levels in the sub 25k for at least the rest of 2022, and I think at least half of 2023. Those are just my thoughts. I mean, when you look at the rest of the bear markets, obviously there's more downside, and even if there's not more downside, they typically last almost 2 years. We've only been in the first year so far. So it's definitely something to consider. I would be very patient in these markets. I would just be stacking cash. Don't fight the Fed. Just go along with them until they flip, until they pivot, until they change their policies. Because, they basically control the markets during these times. So if you guys found any value, if you enjoyed the video, make sure to like and subscribe down below, and leave in the comments what you liked about the video, what you didn't. And I'll see you guys in the next one. Peace.